I'm not sure I saw an email come this week to me.
Now we're live. Yeah, no, I don't always get those emails too. Hey, everyone. I'm Shane Oglu, along with my partner, Richard Hodges, and we are the Rogue Traders. You can check us out at roguetrader.academy. And this is, of course, Deribit Live, where we talk at you for about 30 minutes about interesting things or things we find interesting in the markets and what we're doing and how we're making money. So welcome, everyone.
That's one way to put it. The other way is that we desperately scrabble about for stuff to talk about before each episode.
Never, Richard, never, never. So who we got in the room today? We got Cora. As always, you have Vladimir. Hey, great to see you, Vladimir. Andrea.
Nick, faithful.
Yeah, Andrea. And you can notice my throat, my voice is actually coming back. It's actually getting better. It was up and down there for a while. It got really bad, but I'm on the road to recovery, so I'm pretty damn happy about that. And
there's going to be no respite from your jokes.
Yeah. You're going to bear the full brunt of my jokes. Yeah, and then you can see I'm wearing a sweatshirt because, damn, it was cold today. We had a lot of snow in the mountains here in Andorra. And I was quite chilly. So even though it's practically summer for most people, it's winter for me. All right. So a couple of things. While we're waiting for some more people are coming to the room, I'm going to do my best to entertain you. I was reading something because, I'm thinking, what happened on June 13th? Well, in 1920, get this. The U.S. Post Office, they made a ban on mailing children and animals. And here's what they say about it. The choice came after several cases, including parents mailing their child to their grandparents. Actually seems pretty reasonable. A woman in the middle of a divorce mailing her child to the father. Again, okay, I accept that. And somebody mailing a skunk. People actually mailed their kids up to 1920. It's remarkable.
It was cheaper, wasn't it? It was cheaper to send your child by post than to put them on a train.
Yeah, like did they have regulations for those holes you need to have in the box?
No, the photograph I saw of it was that they just sat the child in an open box. He just sat in the box and got transported by the postman into the van. Just sat in the box in the van.
Oh, that's remarkable. The other interesting thing I read was in, I think, 1980 or 81, Queen Elizabeth was shot at by a guy with some blanks and a gun. And at first I was like, oh, wow, I didn't know that. The more I thought about it, the more I thought, you know what? It does kind of ring a bell. A guy just shot at her with some blanks because he wanted to be famous. She was riding a horse at the time. Do you remember that?
I don't.
Yeah, interesting. Anyways. All right. More people coming in the room. I think we're ready to rock and roll. All right, so let me share the slides here. Bam. All right, so trading crypto options with the pros. Yeah, that's us, guys. Just in case you were wondering, it's yeah. All right. What are we talking about today? This is actually really, really, really cool because I've got this week was a stellar week for trading. I mean, it was fantastic, even though some people. And I don't want you to feel bad if you didn't make any trades or if you didn't make money, but you're going to see what I did and why I did it. And I think even, Richard, I think your market making efforts, like everything was kind of really going good because we had some good up and down movement. But I'll get into this, the micro strategy.
I can kind of, I'm happy to show a screen of what we're doing.
Sure.
Yeah.
But it's basically the micro trading strategies, and they're more positional trading strategies. And especially as we get into the summer, it's really useful because we've got low vol. I mean, we might have vol in the 30s or 40s, and we don't want to be selling vol when it's low generally. So I'm just going to trade positionally. I'm not even going to worry about vol. I'm just going to do it based on price, and I'll show you exactly what I mean and what I did this week. And I think that you're going to find this very simple, very straightforward. And I'll give you my philosophy, my golden rule at the end of it that I always follow that almost never lets me down. But first, let's take a look at the performance. Now, we set up a fund with about $5,000 or so called the Synthetic Miner Account. And this is done just for everybody in Deribit Live. And what we try to do on there is we try and beat the miners. So instead of going out and buying mining equipment, if you want Bitcoin, we thought, well, let's just use options to generate more Bitcoin and see how it goes. So these are our stats that were taken, a snapshot taken this morning. So we started off with 0.0825 of Bitcoin, and you can see we're up. I mean, geez, 0.1099. Is that right?
Yeah, that was the P&L this morning. Yeah.
Okay, fantastic. That's great. I mean, we're up 33%. We've increased our Bitcoin by 33% in 15 weeks. I think that's fantastic. Everything's going swimmingly, and you can see here $5,500 was the starting US dollar cash. That was the value of it when we bought it 15 weeks ago. Now it's up to about 7,500. We're not so concerned because that's going to fluctuate around as Bitcoin's price moves down. That's going to come down. Our idea here is we just want to generate more. We just have more and more Bitcoin because we're long-term bullish on Bitcoin. We think it's going to go up, so we want to have as much of it as possible. And now when we annualize those numbers, we're up 245%. And versus hodling, you'd be up about 25%. Now let's just quickly.
That's an insane number, 245%. Actually, I did some analysis of this in terms of Sharpe ratios as well, just to see whether we could actually try and fob this off onto hedge funds as a strategy. But actually, the Sharpe ratio is a little low at 1.2. It's not bad. I mean, 1.2, 1.25. So it's a bit scary for sort of hedge fund clients, but it's perfectly acceptable for if you're doing your own trading and you know what's going on. It's a respectable, decent return, right?
Yeah, no, I think it's great. And we had some, and you said the ratio is a little bit low. And if people don't know what a Sharpe ratio is, you can just look it up. It's just a way of measuring. And the lower it is, a little bit more volatility in there, a little bit bigger drawdowns. Yeah. But here you can see the chart. And this is the Bitcoin return for the synthetic miner versus hodling. Hodling is always going to be just this straight line because you just bought and you're holding, right? Hodling. So you can see this. The trend lines in there looks quite nice. And if we take a look at our US dollar return, starting to look good. It's just in a nice uptrend. Hopefully over time, we're going to get a larger and larger distance between the red line, the hodlers, and us. The thing is, when we started this, we were only taking a snapshot, I think, once a week, but now we're starting to do it pretty much every day. So it's going to smooth out those dips, those valleys and spikes and valleys. All right. So first things first. So actually, and I'll just mention right now, Richard is going to cover this. We're going to take a look at this account. We're going to take a look at our current trades in this account. So if you want to see what the heck we're doing in there, stick around and we'll show you. We'll reveal everything. There's no secrets here. We set up this account specifically for you guys. So let me shut this off here for now. Let me go to the slides. Stop the presentation, and I'm going to pop over to Bitcoin. Let's just take a look at this MicroStrategy. So, Richard, was there something you wanted to jump in first?
I was just about to say, isn't that excellent value? Where else would you get people funding an account for you, showing you exactly what they do, and showing you how to make money, all for free?
Well, you know what we should do, Richard? We should see if Deribit will allow us to put like a tip feature in. So every time you say something clever or worthwhile, they can just ding, give us $1.
Oh yeah, cool. That'd be good.
That'd be cool. And then we'll have like the float across the screen. I'm sure we could do that.
We're poor traders. Send money.
That's right. Yes, send money. All right. Let me go to screen share, and I'm going to bring up my window here. I think it's on Bitcoin. Yep, it's on Bitcoin. So this is where we're at right now. We're 67,000 and a half or so. But what I'm talking about is, and if I zoom out a little bit, you can see that I've just drawn these big sort of blocks here and here. No special skills required. Pretty simple stuff. Just where's it hung up before? Where's this basic support and resistance? I'm not using Fibonacci's. There's no gun. There's nothing going on here except a couple of basic things. No, the only technical indicators I have here are my unicorns. Got unicorns up here because that's when I'll take a lot of action. But
where's my new moon indicators?
Oh, I don't leave the moon indicators on this.
Oh chart. Man, you need to use the moon indicators.
It's too complicated. All right. So the point is we were cooking along before the weekend. So what's 13th today, right? So it was the 10th. And this is all stuff I said to our members in our Telegram channel. You can follow along with us of what I was doing at the time. I'm not always right, but I'll get into my golden rule in a minute. Let me go into replayed mode. And let's go back to we'll go back here. This is the weekend. So, right. So I'm just going to replay this as it happens. And of course, I know what happens. I just saw it. So yes, I'm not trying to pretend I know the future. I'm just going to tell you what I was talking about at the time. Look, so we go to the weekend. I'm like, okay, guys, weekend's here. Nothing's going to happen. Let's just sit on our hands. Volatility was down low. There's no reason to do a damn thing. So we're sitting here. Okay, holding the range. It's in this box. Not much to do. Do. Here we go. Come on, go faster, a little faster. There we go. Bam. Whoa. What's this? Okay, we broke out of the range. Do I take action? I'm not sure. Maybe. Is it going to go up? Is it going to go down? I have no freaking idea. But I'll tell you what I do know. I've got this big giant box here. It's bounced off it. And I can go way in the past, got stuck in it. Is it likely to go plunging through? Probably not. It might. It could be a news play. I don't know what's going on, right? So what do I do now? I jump on the Telegram channel. I tell our folks, I say, look, I'm selling puts now. I'm selling puts because it's probably going to get hung up here. Maybe it'll plunge in here, but it's probably going to get hung up here. Where am I going to sell them? Well, I'm going to sell them down in this range. Am I going to dump my whole account onto that? No, I'm not. But I'm going to start to scale in. Maybe I'll sell some 66s, maybe some 65, maybe some 64s lightly, because it could bounce right back up and I'll look like a golden boy. It could go back down more. I might add to it. I recognize I might have to manage some of those positions. Fine. Let's see what happens. Okay. I start selling. Whoa. Down more. I'm selling more. Selling more. Wow. Now I'm selling stuff down here. Maybe some of the stuff I originally sold is close to the money. I'm okay with that. Maybe I add to it. Maybe I don't. Maybe I'm just adding to these ones. It's also important to recognize that I buy cover in advance. When it was up here, cover was dirt cheap. Vol was low. I was buying puts and buying calls up in here, dirt cheap, just like I always do. I put my coverage in first when I can. So these are all done as spreads, limited risk spreads. Okay, fine. Let's roll forward. Boom. Hey, I got a bit of reprieve, a little bit of a bounce up. It's up here. Okay, cool. Now, these are all short dated. This was on Monday, Tuesday, this happened. I was selling Wednesday, Thursday, and Friday expiries. Okay, let's see what happens. Okay, hey, now the values bleeding out of these things as it hangs out here. I'm fine if it just sticks here. What's happening? Kaboom! Holy guaca frickin' moly, are you kidding me? Right? We're right back up. But where do we go? We went back up into the box. So what am I doing? Well, guess what? I'm selling calls. I'm selling at 71, 72, 73, 1, 2, 3 days out. Right? And what happened to all these puts? Well, they're getting bought back like you wouldn't believe, right? Or they're super low in value. So I've reduced the number of puts because I'm buying them all back for next to nothing, right? Bam. Holy crap. This is the CPI number that came out, right? And then what do? We're just kind of hanging out right in the middle. So all these calls I sold back here, most of them got bought back. These were already bought back, most of them. Maybe I've got a few stragglers on each side, but my risk is practically zip. And now that's it. That's just it. That's how simple it is what I'm doing. And here's my golden rule I said I'd share with you. And I do this with all my trading. If I have these levels of support and resistance, if we're going in a channel, here's the wider channel. Here's the top of the channel. Here's kind of the bottom of the channel. I always bet that the channel will hold every single time. I will bet this channel will hold every single time, and it works up until it doesn't. And when it doesn't, I take a loss, and I either just close out with a loss or I reverse my position. It's that simple. We don't have to overcomplicate anything. The channel will hold until it doesn't, just like the trend is your friend until it isn't, right? If it's trending up, you just keep staying with the trend, trading with the trend until it busts, and then it's over. So you're probably going to take a hit at the end of it. Okay, fine. But you might maybe made 2, 3, 4, 5, 10 trades in a row where you were profitable, right? Who cares? Losses happen. That's it. That's the micro trading strategy. I didn't give a rat's patootie what the IV was of these options when I was selling them. I don't care. I was selling them on price alone, and they were expiring in 1, 2, or 3 days. All right, and when you're selling that close to expiry, you know the value, the decay is just going to, as soon as it settles down. So as soon as it came down here, came up here, and it started going sideways, all the value got sucked out of most of those. Probably 30% of the value disappeared just like that in probably 12 hours, right? That's what I'm talking about, micro trading strategies. So when we're in the summertime, when we're in a low vol environment, we don't want to be out there sticking our necks out selling high IV. We just want to be trading lightly here and there, maybe being completely flat, waiting for a move like this, or maybe it'll go down further. Who knows? But I'll take the other side of that, and I'll just do it as a positional price-based trade, not based on anything else. And that's sort of the philosophy. And this was a fantastic week. I mean, I think I increased my account equity by about maybe 5 or 6%. Total equity up just from that, just from those trades, short-term trades. Don't have to babysit. It was a wonderful thing. So that is the kind of my thoughts and lessons. And this is what I'm going to do all summer long. And I'm going to keep trading this channel until it breaks. And then we'll see what it is, and we'll adjust our strategy. As simple as that. So let me stop sharing this. Richard, if you want to, do you want to share the synthetic miner account to show people what we got going on right now and our performance there?
Yeah. Let's have a look at the old share screen. Yeah.
Yep.
Window, entire screen, to share. Okay, so here's the positions in the book. You can see that we've got a whole bunch. We've got 2 puts and 1 call looking to go out tomorrow, and they've been extremely well. You took a precaution, didn't you? You rolled some 67s or 66s down to 67s down to 66, 65.
Yeah,
and
yep.
That was a good, it was a move for comfort, really. Looks like these are all going to expire worthless if we're lucky, but we've got little bids in at 5 basis points just to come out early. There's no I mean, it's nice to squeeze it till the very end, but it would be a shame to get it horribly wrong for $15. Then we're just short a couple of put spreads on next Friday, and so the plan is that when these 2 put spreads and this call spread come off, we'll just go and write another put spread, I think probably at 28th of June or maybe even 5th of July. Depends where the vol is. And 1 call spread probably on 20th. I might even do the call spread daily, actually, or we'll see. See how strong the market is.
We could experiment a little bit there, too, especially if the market's flat. We might want to shorten the time frame.
But long story short, we're most of the time looking to be short 3 put spreads and short one call spread. And looking to be pulling in about 10 basis points per day when we write the spread. That's the sort of rule of thumb. Not always possible when vols are this low. I mean, we're heading back into a low vol environment. Well, I mean, okay, overnight at 50 because we've got expiry tomorrow, but vols for the weekend are already down to 43, and then Sunday 38, and next week 43. So sub 50s, and it's difficult to get our 10 basis points a day, so we have to settle for 8 or 7 or something, but it's still better than nothing.
Yeah, and I see D-vols under 50 again.
Yeah,
it took a big crash yesterday, didn't it? Yeah, very fast.
Yeah, there seems to be the regime at the moment. Vol crashes unless there's something to worry about, right? Vladimir's saying, notice today puts with shorter term costs lower right now than bigger. You tend to find in normal sane markets, longer dated options will tend to have higher implied volatility simply because there's more variance about what can happen over the long term than the short term. But when you've got economic events like yesterday, we had the combined FOMC and CPI numbers in the same day, so that we got some pretty spectacular market action over that. And I could actually just show you this is one of the strategies that we're experimenting with for some hedge funds, and I won't tell you too much about it because it's all top secret, but this essentially is basically buying and selling futures around these big moves, and you can see we're sort of just swing trading around these moves. And if we go wrong, then we take away some of the pain with options. This strategy is doing pretty well, actually. It's annualizing about 100% a year on a Sharpe ratio of 2.5. So we've actually got interest on that one from managers.
Actually, I think Constantine did put a question. He says, "What's the acceptable Sharpe ratio for institutions?"
Yeah, that's interesting, right? So if you speak to really highly strung crypto hedge funds who kind of think they're clever, then they're all asking for 4+ Sharpe ratio or 5 but Nassim Taleb, the famous trader and mathematician, will tell you that high Sharpe ratio strategies tend to always blow up in the end because they get too highly strung. But I think the rule of thumb is most hedge funds that are sane will say that if you're making a Sharpe ratio of 2.5, it's good enough, and anything beyond 3 is too much try hard. You should be just taking more risk because you're wasting money if you've got a Sharpe ratio of higher than 3. And how do you calculate it? The Sharpe ratio is isn't it the percentage gain divided by the standard deviation of returns, something like that? I don't know. My quant guys will know all that stuff. I don't care about that. But you can look it up on Wikipedia, right? Sharpe ratio. And there's another one called Sortino ratio, which only measures down days. So you're measuring returns by the standard deviation of your down days. Yeah, but if you're you're doing a Sharpe of 2.5, you're doing great. That's it's nice steady returns. You might get the occasional drawdown, and it might last for a week or two, but might be a month. But you're on the end. You're trending up. I've spoken to some funds who wanted Sharpe ratio of 5+ and 50% returns consistently, and you just know that that's going to go horribly wrong because you're so tightly constrained with what you're doing that in the end the market's going to break you.
Yeah, that's the land of unicorn and fairies. A couple of things. You were talking about, I think you were asked by Deribit to experiment with a new margin thing. Are we allowed to talk about that?
Yeah. Actually, that's the reason I pulled this account up. It was more than to talk about the account. So you see this up here. You see my mouse there?
Where the portfolio margin is? Yeah.
Margin indicator. You see that? I've got it selected to cross portfolio margin. I've been blessed by the Deribit gods. I have a sneak preview of this feature, which is coming out. I think on the 20th, I was told, but it's not official, so don't quote me on that. But soon. And this is cross portfolio margin, which means that all currencies are used as collateral. So you can now, you will be able to soon. It's in this account, you can see we've got Bitcoin and USDC. So you'll actually be able to write Bitcoin options against USDC holdings. So there'll be no need to convert to BTC and then sell perps against it to make synthetic dollars. You can just get in there and trade with whatever you've got. You can see that they take a haircut, 2% on USDC to turn it into dollars, and there'll be some factors around, what does it all mean in terms of the expected shock of the underlying price. But long and short of it, you'll be able to hold dollars and sell puts, and you'll then get more efficient margin use when selling puts if you're holding dollars, and you can hold Bitcoin and sell calls, and you'll get more efficient margin use by doing that. So
nice. I think a lot of people appreciate that because it'll take the pressure off them hedging. Let's say you've got 3 Bitcoin and you want to trade. Well, instead of having to have it all in Bitcoin, you could move some to USDC, keep some, in Bitcoin to have appreciation in price. Sell puts. I think it'll give more options in a matter of speaking, because a lot of people are stressed. They say, I got all my 3 Bitcoins sitting in Bitcoin. I don't know. Do I have to just buy a whole bunch of puts to hedge this off? What do I want to do? A lot of people get a bit confused on what they should be doing. And it'd be nice if you can just have some or all of it in USDC and still try and accumulate, do a synthetic miner, but without having the Bitcoin, right? So,
just actually synthetic miner would probably make on average more money if you just held dollars and then sold puts. Yeah.
Yeah, you're not going to get those. You know what? We need to think about this because we're not going to have those same drawdowns, are we?
Yeah.
Yeah. Okay. We should. Maybe we should convert. We'll talk about that maybe for next episode.
Yeah.
Also, you told me that next week you might be broadcasting from Deribit headquarters. What's going on?
Well, it may be that I have a meeting in Amsterdam.
Okay.
So I've actually reached out to them to see if it would be convenient for me to pop into it from there.
Okay, so it's not a done deal. Well, you could have Pierino on the call with you, our Deribit guy who's been on I think a couple of times with us. Always good to chat with him. So maybe you could do a joint thing with him over there if you have.
We'll see. Let's see what they say. Yeah. I mean, they're busy guys, right? They're busy producing great features for customers. So
yeah, and as long as you guys don't go for lunch and have some brownies before the call, I think we should be okay. Although that might make it a little bit more entertaining. You know, Amsterdam, there's a lot of stuff going on.
I wouldn't know what you mean. I managed to work in the city for 10 years and never ever saw any drugs or bad behavior.
Oh my gosh, I have no idea what you're talking about.
Right. That's my story, and I'm sticking to it.
Yeah, absolutely. And Vladimir says he learned something new today. Good. I did too, but it was about the U.S. Post Office, not million kids. What else we got here? Excuse me, Vladimir. Yes, it's a great feature. I love this new cross-dressing margin they got going on. Fantastic. Also, Vladimir makes a point here. He says also you can instantly sell profits and sell puts against those profits to buy cheaper. I got to think about that.
Okay. So you get your profit from your option, and then immediately sell the Bitcoin that you've received from your option into dollars, and then sell puts against the. Yeah, exactly. Yeah.
That Vladimir is a sharp guy.
He's a sharp cookie, that guy. You got to watch him.
Yeah. Hey, we're at the bottom of the hour. Anything else you want to cover, Richard? I feel like there's one other thing we might want to talk about.
There was something I was going to mention, but I don't think so.
Okay. Any last questions? Put them in now.
Mm.
Otherwise, we'll actually finish on time for once. It's been a long time. Not much to talk about in the markets. We're just in this range, holding tight. I think we got some numbers. Isn't there some more employment numbers or something coming out this afternoon? I think there might be. So we could see a little bit of action, I think, this afternoon.
Let's have a look. Component economic data.
You've got it there already. You've got it already on the top of your menu there.
No, that's news. But if I do add economic data as well, then we.
No, the economic calendar is right at the top. I can see it on your screen, right beside news. Right beside news, top left. Oh my God! How do you not see what I'm? There it is, right there.
Yeah. Okay. Wasn't looking for it.
Fine.
PPI month on month. That doesn't mean anything, right? This is nonsense.
I don't think it's going to be too. I thought there was employment, but I guess not.
They've got Michigan consumer sentiment on Friday, but what do we care about those Michigan people?
I think I was looking at Forex Factory, their economic calendar. I've just a habit. I've used them for years and years. They seem to have a little bit more data than Deribit for some reason sometimes. But
I think Deribit filter the news for what's relevant to options. I just see Bitcoin's just taking a quick pump.
A little bit, yeah.
I think people are just de-hedging. People are de-risking up to expiry, and then the hedges are coming off and moving the price around. I think so. Real indications. This is a weekly expiry. They shouldn't be moving markets, but the markets are so thin. I think that these hedging trades are moving the price around.
Yeah. And what are we going to do if the market shoots up into our box, up at 69.70? Well, what am I going to do? I'll be selling calls. I'll be selling calls. Call spreads, just to be clear, do call spreads, and same thing if on the downside.
I hope it does. I've got a load of residual cover left up there actually from all the call legs I bought back.
Yeah, beautiful.
Nice.
Okay, I think that's about it. Yes, Andre says you've triggered the market move again. Yes, we are influencers, aren't we? Yes. I'll just leave that at that. Okay, thanks everyone for joining us.
Imagine if we had enough followers on this channel, and when we just placed sold calls, and then everyone else did. Imagine what would happen.
So we do our own version of GameStop. We just do it with Bitcoin, right?
Call it Deristop.
Deristop. Yeah. All right. Okay, everyone. Hey, thanks everyone for joining us. As always, we really appreciate having you here. Lots of good questions. And feel free to join us next week, Thursday, 2 p.m. for the next Deribit Live. Catch you next week, everyone.